Hi, welcome to my channel Industry 4.0. Today, in this video, we will discuss how AI in finance is changing the way we relate to money. Also, you will know 5 ways how AI has transformed the finance industry. Please like and share the video and subscribe to my channel. So, let's start the video. Introduction. Artificial intelligence has specified the world of banking and therefore the financial industry as a whole how to fulfill the stress of consumers who want smarter, more convenient, harmless ways to access, spend, save and invest their money. AI in finance is changing the way we relate to money. AI provides assistance to the financial industry to rationalize and optimize processes starting from credit decisions to measurable trading and financial risk management. Credit decisions. Credit is sovereign. A current study established 77% of consumers favored paying with a debit or MasterCard related to only 12% who favored cash. But easier payment options are not the only reason the supply of credit is vital to consumers. Having good credit aids in receiving favorable financing options, landing jobs, and renting an apartment, to call a couple of examples. With numerous of life's important necessities hinging on credit history, the approval process for loans and cards is more important than ever. Artificial intelligence solutions are helping banks and credit lenders make smarter underwriting decisions by utilizing a spread of things that more accurately assess traditionally underserved borrowers, like millennials, within the credit deciding process. 5 ways how AI has transformed the finance industry are: 1. Risk assessment. Since the very basis of AI is learning from past data, it is natural that AI should succeed in the financial services domain, where bookkeeping and records are second nature to the business. Let's take the example of credit cards. Today, we use credit score as a means of deciding who is eligible for a credit card and who isn't. However, grouping people into haves and have-nots is not always efficient for business. Instead, data about each individual's loan repayment habits, the number of loans currently active, the number of existing credit cards, etc., can be used to customize the interest rate on a card such that it makes more sense to the financial institution that is offering the card. Now, take a minute to think about which system has the capability to go through thousands of personal financial records to come up with a solution. A learned machine, of course. This is where AI comes in. Since it is data-driven and data-dependent, scanning through these records also gives AI the ability to make a recommendation of loan and credit offerings which make historical sense. AI and ML are taking the place of a human analyst very fast, as inaccuracies which are involved in human selection may cost millions. AI is built upon machine learning which learns over time, less possibility of mistake and analyzing vast volumes of data. AI has established automation to the areas which require intelligent analytical and clear thinking. Financial services chatbots have indeed proven themselves as a powerful tool to customer satisfaction and an unmatched resource for the enterprises, helping them save a lot of time and money. Now, getting back to Facebook's endeavors in designing and developing bots to make negotiations the way humans do, let us analyze the chances of the success of this research. This new technology will not only change the way we do business, but also non-commercial activities. The example of non-commercial activities can include fixing meeting time. The bots can fix up the meetings keeping in mind the availability of everyone involved in the meeting. 2. Fraud detection and management. Every business aims to reduce the risk conditions that surround it. This is even true for a financial institution. The loan a bank gives you is basically someone else's money, which is why you also get paid an interest on deposits and dividends on investments. This is also why banks and financial institutions take fraud very, very seriously. AI is on top when it comes to security and fraud identification. It can use past spending behaviors on different transaction instruments to point out odd behavior, such as using a card from another country just a few hours after it has been used elsewhere, or an attempt to withdraw a sum of money that is unusual for the account in question. Another excellent feature of fraud detection using AI is that the system has no qualms about learning. If it raises a red flag for a regular transaction and a human being corrects that, the system can learn from the experience and make even more sophisticated decisions about what can be considered fraud and what cannot. 3. Financial advisory services. According to the PwC report, we can look forward to more robo-advisors. As the pressure increases on financial institutions to reduce their rates of commission on individual investments, machines may do what humans don't work for a single down payment. Another evolving field is bionic advisory, which combines machine calculations and human insight to provide options that are much more efficient than what their individual components provide. Collaboration is key. It is not enough to look at a machine as an accessory, or on the other end, as an insufferable know-it-all. An excellent balance and the ability to look at AI as a component in decision-making that is as important as the human viewpoint is the future of financial decision-making. 4. Trading. Investment companies have been relying on computers and data scientists to determine future patterns in the market. As a domain, trading and investments depend on the ability to predict the future accurately. Machines are great at this because they can crunch a huge amount of data in a short while. Machines can also be taught to observe patterns in past data and predict how these patterns might repeat in the future. While anomalies such as the 2008 financial crisis do exist in data, a machine can be taught to study the data to find triggers for these anomalies and plan for them in future forecasting as well. What's more, depending on individual risk appetite, AI can suggest portfolio solutions to meet each person's demand. So a person with a high-risk appetite can count on AI for decisions on when to buy, hold, and sell stock. One with a lower risk appetite can receive alerts for when the market is expected to fall, and can thus make a decision about whether to stay invested in the market or to move out. 5. Managing finance. Managing finances in this well-connected and the materialistic world can be a challenging task for so many of us. As we look further into the future, we can see AI helping us to manage our finances. PFM, Personal Financial Management, is one of the recent developments on the AI-based wallet. Wallet, started by a San Francisco-based startup, uses AI to build algorithms to help the consumers make smart decisions about their money when they are spending it. The idea behind the wallet is very simple. It just accumulates all the data from your web footprint and creates your spending graph. Advocates of privacy breaching on the internet may find it offensive, but maybe this is what lies in future. Thus it has to be the preferred personal financial management in order to save time from making lengthy spreadsheets or writing on a piece of paper. From a small-scale investment to a large-scale investment, AI commits to be a watchdog of future for managing finances. Without a speck of doubt, AI is the future for the finance industry. Since the speed at which it is making progressive steps towards making the financial processes easier for the customers, it is very soon going to replace humans and provide faster and much more efficient solutions. Bots are gradually evolving as innovations are being in the AI sector. Massive investments are being made by the firms who are seeing this as a long-term cost-cutting investment. It helps the companies in saving money of hiring humans and also avoiding human errors in this process. Though it is still in its nascent stage, the speed at which it is progressing to evolve the finance sector, it can be well expected that the prospects are going to lead to minor losses, smarter trading, and of course top-notch customer experience. Examples of companies helping the financial industry. Zest Finance, Los Angeles. Zest Finance is the creator of the Zest Automated Machine Learning (ZAML) platform, an AI-powered banking solution that helps companies measure borrowers with little to no credit information or history. The platform uses thousands of knowledge points and delivers transparency that other underwriting systems cannot, which aids lenders in better judging populations traditionally considered at risk. ZAML is an end-to-end platform that institutions can implement and scale quickly. Consistent with Zest Finance, its industrial impact is that the auto lenders using machine learning underwriting cut losses by 23% annually, more accurately predicted risk, and reduced losses by quite 25%. DataRobot, Boston. DataRobot delivers machine learning software for data scientists, business analysts, software engineers, executives, and IT professionals. DataRobot helps financial institutions and businesses quickly build accurate predictive models that enhance deciding around issues like fraudulent MasterCard transactions, digital wealth management, marketing, blockchain, lending, and more. Another offering firm, Crest Financial, is using DataRobot software to form more precise underwriting decisions by predicting which customers have a better likelihood of default. Synaptic Systems, NYC. In addition to other financial-based services, Synaptic Systems provides an underwriting platform that provides banks and credit institutions more transparency while cutting losses. Presently recording over 100 million customers, Synaptic's AHR attaches myriad unstructured and structured data, smartly transforms the info, learns from each interaction, and offers contextual underwriting intelligence. Synaptic bragged $151 million in lost savings in only 3 weeks at work with one major MasterCard company. Underwriterai, Boston. Underwriterai analyzes thousands of knowledge points from agency sources to assess credit risk for consumers and few commercial loan applicants. The platform acquires portfolio data and applies machine learning to seek out patterns and determine good and bad applications. Since working with Underwriterai in 2015, a serious online lender providing dental financing reduced its default rate from 17.8% to 5.4%, consistent with a case study cited on the company's website. Kensho, Cambridge, Mass. Kensho offers machine intelligence and data analytics to leading financial institutions like S&P Global, JP Morgan, Morgan Stanley, and Bank of America. Kensho's software offers analytical solutions employing a combination of cloud computing and tongue processing, NLP. The company's systems may give answers to complex financial questions in plain English. Traders with access to Kensho's AI-powered database within the days following Brexit used the knowledge to quickly predict an extended drop by the British pound, consistent with a 2017 Forbes article. In March 2018, S&P Global announced a deal to accumulate Kensho for roughly $550 million. Trim, San Francisco. Trim may be a money-saving assistant that connects to user accounts and analyzes spending. The smart app may cancel money-wasting subscriptions, catch better options for services like insurance, and even negotiable bills. Trim has saved $6.3 million for quite 50,000 people, consistent with a 2016 VentureBeat article. Alpaca, San Mateo, California, U.S. office. Alpaca combines proprietary deep learning technology and high-speed data storage to supply short and long-term forecasting applications. The technology of Alpaca recognizes shapes in market price changes and translates its findings into multi-market dashboards. Recently, the corporate joined with financial news giant Bloomberg to supply users with its Alpaca Forecast AI prediction market. The program predicts short-term forecasts in real time for major markets.